Good morning to you, and thank you so much for being here. You're listening to Smooth 98.1, Love Music, Love Life. My name is Valentine, and here's Rotus. Good morning, man.
Morning, Valentine. Good morning, Lagos, and good morning to our special guests. Good to be here.
Oise Ajayi, the team lead, Equities Research at ARM Securities. Thank you, Oise, for joining us this morning. Welcome to Business.
Morning. Thank you for having me this morning.
Thank you. Join us on the conversation. Send messages through WhatsApp 0809-444-0981. That's the number for messages. You can also send it through YouTube for streaming live. So please watch, subscribe to our channel. Just type Smooth FM Lagos in the search, and you're on. Here it is.
Great stuff. Oise, I saw a very interesting article in the paper yesterday comparing investing in T-bills with investing in startups. I think the question was, do Nigerian investors prefer investing in treasury bills to investing in startup companies, which I thought was very interesting. And I wanted to get your take on it because they were looking at the last auction, T-bill auction, and I think it was oversubscribed. I think it was 230-something billion that was offered, 430-something billion was what the subscription was. And they're like, well, Nigerians, it's, what do you make of that comparison? T-bills versus investing in startups?
First, I would say that the average guy can invest in T-bills, right? The average investor probably cannot invest in any startup. And there's also the fact that a lot of startups fail. Actually, a high number of startups fail. So, if you look at the demographics of the average Nigerian investor, you find that most of the people investing in T-bills are very, very risk-averse people, or they are bound by regulation to actually invest in these treasury bills. So they absolutely have to. Or they are just investors who are looking to preserve their capital and then make whatever minimal gain is guaranteed on their investment. With startups, there's no guarantee the company is going to is going to grow at the rate you expect it, or even if is going to succeed at all. So it's a huge risk. You're carrying on a lot of risk, and there's no guarantee of anything, in the end. And then you could find yourself with, nothing at the end. Meanwhile, with T-bills, from the start of your investment, you know what to expect. Either you're going to capitalize your investment, or you're going to buy at a discounted price and walk away with, your gains from the start. So, it's an unfair comparison. The amount required, the processes required in investing in both, they differ quite a lot. And then, of course, the risk nature, which is number one thing, is one of the major things that sets both investors apart. Not that Nigerians are not investing in startups. A number of Nigerians actually are. A number of Nigerians are interested in that. But a number of Nigerians are also very risk averse and will rather preserve their capital than take what they might deem as unnecessary risks and probably lose everything they have.
All right, thanks. And for anyone that's curious, I think it was in yesterday's business day. Why T-bills are more attractive to Nigerian investors than startups? That was the headline there. While on the subject of T-bills, that's money markets or fixed income. Could Nigeria be tapping the Eurobond markets soon? What's on the horizon?
It's very likely at this point, even though we haven't received much guidance on the borrowing plans. At the presentation of the budgets, there were talks about plugging the deficit gap with 2.34 trillion naira in domestic borrowing and 2.24 trillion in external funding. Last week, the president received approval to request those loans from external sources, and then the Eurobond market is likely going to be one of the sources tapped, to plug that deficit gap. So we could very much see one sometime in the second half of the year.
Excellent. Okay, thank you so much for that. I want to touch on very quickly. The central bank put out some new restrictions on not restrictions, excuse me, parameters, regulations for PSPs, payment service banks. They're not allowed to take foreign currency deposits, not allowed to provide loans or guarantees, whether directly or indirectly, to customers. The argument is that it's a risk management approach to PSPs. Well, what do you make of those parameters?
Yeah, I mean, they are payment service banks. They're not deposit money banks. They're not merchant banks. They're not microfinance banks. There has to be some regulation on their activities, and these regulations have to be well documented to ensure all players in that space are acting accordingly. So I mean, it's only right. You don't expect the payment service bank to be to issue loans or to receive some form of payment such as airtime for or as deposits. It would be very much going against the rules, very much going against their core activities. So it's no surprise we're seeing regulations like this to protect both the payment service bank and ultimately the customers, which would be you and I. You don't want a situation where your payment service bank is providing excuses as to why you can't get funds out or you can't execute certain transactions. So it's only right that these regulations are in place, and it's only right that these banks adhere strictly to some of these in fact to all of these instructions or to all of these directives.
Great stuff. I want us to move to the capital markets. The market was down yesterday to kick off the week. Is there anything, any triggers, anything new enticing in the stock market for investors?
Nothing particularly new has come to the market. The drivers of growth are still very much absent. The macroeconomy is still in bad shape, to say the least. Fixed income yields are much higher than they were as at this time last year. So really, the incentives to put money into the equities market are not that high. The market is currently returning about -6%. Current return is also not exactly attractive to investors. So while we might see pockets of bargain hunting or pockets of profit taking here and there, there are really no triggers. It will just be a case of investors, just doing their thing or taking position, ahead of whatever might be coming. I mean, we're entering earnings season for the half-year results. So, I mean, a number of companies will declare their interim dividends. A number of companies will declare impressive results that could spoil investor sentiment on the stock. So it's no surprise what we're seeing now, certain movements of volume, but as a particular driver of any strong growth, it's still difficult to call right now.
All right. Thank you for that. We saw some volatility, a bit of volatility yesterday in MTN and BOA. Any particular reason why, or is that just speculation at work?
It could be just speculation. It could be just some bargain hunting. We haven't seen or we have received no particular communication from both companies on any particular developments or any new developments going on with them. So it's not like there's some information out there which investors are acting on. Investors are really just cherry picking stocks which they see value in, and taking position well ahead of the rest of the market.
All right. And what do you think of, as far as any stocks that are interested in, what do you think of both? Any other picks that you have in particular?
Both stocks are really some of the favorites in their sectors. I mean, in the telco sector, I mean, what else would you be looking at beyond MTN and Airtel? And then in the cement space, I mean, after Danksem comes BOA. So it's like people are picking the second favorites whose prices are still relatively low compared to the top picks in the sector. Still very good stocks, impressive financial performance, impressive share price performance as well. Relatively good dividend history as well. So it's only right that we see strong volumes on discounters every now and then.
All right. The index, I think that was down about 1% or 1.02. The tier one names, are those still the be attractive buys in the banking financial sector?
I would say yes, primarily because we are not exactly experiencing a bull market where all the stocks or an entire sector gets to enjoy the good news or the positive sentiment, and then every stock rallies, right? We're in a market where people are actively taking position for a long play or a longer than expected play. And in such instances, you find that investors will typically go for the fundamentally justified stocks, stocks that have historically performed well, both in share price wise and in terms of their financials. And that's why the tier one banks in the sector will continue to be the favorites, save for when we're experiencing a bullish run in the market where the same tide lifts all boats, and which we are not experiencing now. So the tier ones still remain favorites. There are a few other tier two banks, which could easily, which might have some significant upside. Of course, investors would also take position in this, but the volumes just might differ, compared to the favorites in each sector.
Great stuff. Val, go ahead.
Yes, there's a question here from Angel. Angel says, good morning, Rotus. Please, which has a higher return rate, interest on savings accounts or interest on T-bills?
Okay. The interest on your savings account is capped at 3.5% or 3% of the benchmark interest rate, provided you don't withdraw from that account more than 3 times in a month. So right now, treasury bills are yielding as high as 8-9% for the 1-year instrument. I think that difference is clear. If you're looking to actually stay away some funds, right now your better option would be in treasury bills.
All right. D here is questioning the criticism on entrepreneurship. It says, we should balance it with its upsides. And then Edu says, since you guys raised it, is it normal that we have more banks than telco companies?
It's not about having more banks than telco companies. If you look at the MTN union, you find that the revenue from many other banks, almost the same with Airtel as well. So it's not about having more banks. It's really about the structure of the operations and then what generates revenue for both companies and their expense lines as well. What was the first question, please?
Well, the first question, it was an allusion that we have to balance the criticism of entrepreneurship with its upsides.
Okay.
And then Otunoga here is expressing surprise at what seems to show that BOA Cement is ahead of Lafarge, and he wants to be sure if it's true.
Sorry?
That the market considers BOA Cement ahead of Lafarge. Is that true?
BOA is well, I wouldn't say new to the market, but there was some what's the word, merger or coming together, to have to put it in its current position now. Lafarge has had some issues which it has been dealing with, and the market has treated it accordingly. A couple of years back, there was some high finance costs which is significantly eaten into their books, and the market has treated it accordingly, which you would expect to see. So it's no surprise that investors are still going for or picking BUA ahead of Lafarge right now, at least up until everything is clear in their books.
Thank you so much. That's how much time we have for this conversation. Thank you, Rotus. Thank you.
Oise. Yes, Oise Ajayi, Team Lead Equities Research, ARM Securities. Oise, thank you. Oise, thank you so much for joining us.
Thank you very much.